I think the dollar is really going to drop another 15%, 20%. The reason for that is if you go back to, sorry, if you go back to a couple of months ago, everybody was putting money into the dollar and into US assets because of US exceptionalism. You simply didn't think about it. The US had the growth. They had the low inflation. Interest rates were going the right way. Lovely. Now you're in a predicament where the US has actually is busy tearing up all the factors that contributed to US exceptionalism. We're going to see inflation from the tariffs. We're going to see further friction between the Trump administration and the Fed, trying to force it to drop interest rates, even though inflation will be going up. And I think people are vastly overexposed to US assets. For instance, in the last decade, about $18 trillion from abroad. So the dollars were bought and then the money was put in US stocks. And the ownership now by foreigners of US stocks is still about 18%. They've sold about 60 billion out of the 18 trillion in the last couple of months. But that process of exiting the US as safe haven and best performing economy is going to be a long duration trend. So much more to come on the dollar.
Much more to come. So, David, let's put some numbers on this. Let's take the lower bound. If it has another, let's say, 20% to fall, and I'm assuming you're talking about DXY here, that means we're talking about DXY yes. ending up at 80, is that right?
Yes, 80, 85, certainly.
And what would that mean for other assets, dollar-denominated assets? I mean...
All right, so money leaving the dollar, where is it going? Let's talk about that. You did say you're still long the euro, but nervously now. Is it getting a little too crowded?
Well, it's not really that it's crowded. It's that when you look at Europe, and there are an awful lot of other things to worry about. There's the question of the US's new alignment with Russia. What does that mean for Ukraine? Will the Europeans stand up for Ukraine? If so, there will be a break with the US. So there are other sources of volatility which you have to worry about in the euro, which you do not have to worry about if you put the money into gold or into Japan, which would be the primary hedges I would use.
All right. What do you feel about gold right now?
Well, I think the likelihood is that we'll see it about 3,800. Now it's not going to get there in one fell swoop, but I think the reasons why people are buying gold, instability, the possibility of the degrading of currencies and currency management by the US, that sort of thing is still going to be there. So people will go on buying gold. I'd say 3,800.